Hello, everyone, and welcome to this meeting. Very happy to see you this afternoon and this morning, depending on where you are located. We are going to present our 25-26 fiscal year annual results, our outlook for the current fiscal year that we started a few weeks ago, fiscal year 26-27, and we will also present our new strategic plan, Lead the Shift, a strategic plan at the horizon of 2030 that sets the direction for the next years. We will be three during this presentation. Karsten Höppner, Deputy CEO of Wavestone, Laurent Stoupy, CFO, and myself, Pascal Imbert, CEO of the company. Let me start by say a few words about Wavestone to introduce you to the company or to remind you of the main characteristics of Wavestone. Wavestone, we are a consulting firm. In a few key figures, Wavestone, it is 950 million euros in revenue, 6,000 employees, and a presence focused on three main regions: France, GSA, Germany, Switzerland, Austria, and US, UK. Wavestone, it's also a positioning that is focused on high-value services and especially addressing the large transformation programs of the Tier 1 clients. Wavestone has also some specific features, specific characteristics, and I would even say differentiating ones for some of them. First, for many years, Wavestone has positioned itself at the convergence of business and technology. This is a very consultant way of saying more simply that what we are very good at is leveraging technology and innovation to create value in our clients' core business. And naturally, and this is the second specific characteristic of Wavestone today, this leads us to be at the forefront of the AI transformation, to take AI transformation as a strong opportunity for the company, and we'll go through that in a few minutes. So we are taking a very good start on this new wave of transformation that is starting at our clients. We are also a company that is independent, listed. There are not so many consulting firms that are listed companies, and as such, we are committed to best practices in terms of governance, transparency, and sustainability. Finally, we have a Franco-German origin, and so we try to bring to the market a flavor that is slightly different of the major consulting firms, the more global firms that are very frequently of Anglo-Saxon origin. We are not better or weaker than them. We offer a different flavor. I will now hand it over to Laurent Stoupy to go through our financial and extra-financial results.
Thank you, Pascal. Let me take you through the key financial highlights, in fact, for the fiscal year 25-26. Starting with the P&L, as you can see, in fact, Wavestone reported consolidated revenue of 954.3 million euros for the year, up 1%. The firm delivered a recurring operating profit of 119.9 million euros, up 1% also compared to last year. And as a result, the recurring operating margin stood at 12.6%, stable year on year. Operating profit, on the next slide, came in at 111.5 million euros, up 2%. The cost of net financial debt decreased to 0.5 million euros compared with 3.2 last year, reflecting the firm's improved financial position. Tax expense was 27.2 million euros, unchanged compared to last year. And as a result, net income reached 82.1 million euros, up 8%, representing a net margin of 8.6% compared with 8% last year. Earnings per share, fully diluted, came to 3.34 euros compared to with 3.09 in 2024-25. Turning now to cash flow, let me highlight 2 points. First, working capital generated 17.8 million euros of cash during the year versus 5.9 million last year, mainly driven by an improvement in DSO. Second, financing flows totaled 77.1 million euros, including 53.7 million in net loan repayments. As a result, Wavestone no longer has any bank debt, in fact, at the moment. On the next slide, today we are introducing free cash flow as a new KPI for Wavestone. This indicator is calculated from net operating cash flow after deducting investing cash flow excluding acquisitions, lease-related cash outflows under IFRS 16, and cash flows related to treasury share purchases used to cover employee share plans. For fiscal year 2025-26, free cash flow reached 118.9 million euros, up 88% compared to last year. Turning now to the balance sheet. Equity stood at 702.5 million euros at year end, compared with 633.4 million euros last year. Net cash improved significantly to 121.4 million euros compared to 25.6 a year earlier. On share capital, both the number of shares and the shareholder structure remain broadly unchanged. And last information, the board of directors will propose to the annual general meeting the payment of a dividend of 50 cents per share for fiscal year 2025-26, up 9%. That's it for me. And
I will continue with a focus on the topic of AI, which is obviously the hot topic of the market. AI is undoubtedly the real game changer for our client. We think that it's an in-depth transformation, as profound, strong than what we've been through with digital transformation a few years ago. Exactly the same topics. It means gradually changing at our clients the tools they are using, changing their processes, and gradually impacting their business model. Exactly the same cycle, with one big difference is that it goes twice as fast as it went with digital transformation. And this is why it's an incredible challenge for our clients. And this is why the AI wave of transformation and the need of consulting to support in their AI transformation journey is so strong. We have been very active on this topic, and gradually we are basing our vision, the vision we offer to our client, on 5 key convictions. The first conviction is that the market is evolving extremely fast, extremely rapidly. It's buoyant. There are a lot of new innovation and new players that are entering in the market every week or every month. And nevertheless, if our clients want to create value with AI, they have to define a midterm roadmap and without being constantly distracted by changes in their approach with all the new features and innovations that are coming to the market. They must have a midterm roadmap. Of course, they have gradually to adjust this roadmap to make it relevant given the evolution of the landscape. But being very clear in what steps they are going through is absolutely critical in this very fast-moving, very changing market. And this roadmap must be set by prioritizing value creation, return investment, and disruption potential. Our second conviction is that in a market that is dominated by vendors, and some of these vendors are already extremely powerful on other topics, I'm speaking of the hyperscalers, the ability to manage costs, to preserve reversibility, in other words, to avoid locking themselves into a single player and becoming irreversibly dependent, is a key discipline for long-term resilience. Our third conviction is that the SaaS apocalypse does not mean that IT is dead. It's quite the opposite, in fact. IT will be central as soon as you want to scale AI, because data and processes of the business of our clients sit within their IT. So scaling in order to seize real value created by AI requires that our clients work on connecting AI to modern, interoperable, agent-ready architectures where platform models, orchestration capabilities become true strategic assets. Our fourth conviction is that human capital will remain at the heart of differentiation between companies. But as AI structurally reshapes jobs and organizations, the value of the human capital will shift from execution that will be more and more impacted by AI to judgment and trust that will remain in the hands of the human workforce of the company. The transformation of teams and skills therefore becomes a critical success factor. And our fifth conviction is trust. Responsible, ethical, and sustainable AI is not optional. It is a foundation of true trust and value creation over time. It's a condition for adoption. It's a condition for managing risks, and therefore a condition to deliver real value to our client over time. Let me turn now to what AI means concretely for Wavestone. Our signature is that we cover the entire value chain of AI transformation at our clients, from business case to delivery and adoption. And this is built around three key topics we are working on for our clients. First, laying the foundations for AI growth at scale, governance, operating models, AI and agent platform, and trust frameworks. Second, we are working for our client on accelerating deployment and scaling initiatives across the enterprise once the business case has proven its potential value. And third, supporting business transformation through AI and agent-enabled operating models, process redesign, and change management. And our approach is supported by strong relationships with leading AI players, Microsoft, Google, Mistral AI, Anthropic, and others. These relationships are built through many common successes at many different clients, and the value we bring to these partners is very concrete. It's absolutely critical for their technology to provide our client with real value. First, what we bring to our partners is our ability to roll out their technology at scale with differentiated results when it matters most, namely in terms of adoption. And second, the value we bring to our partners is that we enable their technology to deliver actual and tangible business value, which we also know how to steer and how to measure. So far, our development in AI transformation has been a success, and that success is directly visible in our numbers. The acceleration is tangible. In fiscal year 24-25, AI-related activity represented 8% of our revenue. In 25-26, it represented 17%. And for the current fiscal year, we are aiming at least 25% of our revenue related to AI transformation at our clients. Beyond this increasing share of our revenue dedicated to AI, one figure illustrates also the depth of the momentum. We are now working on AI with more than 100 tier 1 clients across all regions where Wavestone operates and across all industries for which we are working. So this activity is not concentrated in just a few accounts or geography. It's a broad-based trend across the entire firm. If I now turn to the other key highlights of 25-26, I'll start by saying a word of the evolution of our revenue breakdown as of March 31st, 2026. From a sector perspective, the changes are in line with trends that we have already shared during the fiscal year. Energy continued to grow, and energy has become the first client sector of the firm, with 18% of our revenue versus 17% a year ago. Insurance comes right behind and has remained extremely resilient through 25-26. Banking declined as it has been declining through the previous year, but I would say the trend is now stabilizing. So it declined in 25-26 to 15% compared to 16% 1 year earlier. But we are seeing stabilization, and we perceive even a slight recovery that has started at the end of the previous fiscal year, and that seems to be confirmed in the beginning of 26-27. Transportation declined more significantly from 15% to 13%, with a marked slowdown at Deutsche Bahn and SNCF. And finally, we have somewhat counterintuitive trends. Automotive and industry increased from 13% to 15%, despite a decline in automotive, but thanks to a strong momentum at some industrial clients and in the life science sector, obviously. And we have also a growth in retail and consumer goods that doesn't seem to be a very buoyant sector. We increased our revenue, our share of revenue from 9% to 10%, and this has been driven by, in fact, a strong performance on the luxury segment. If I try now to provide a broader view of our activity during 25-26, I would say that on the overall, our performance was mixed in a market environment that remained demanding, particularly during the first half of the fiscal year 25-26, the first half that was impacted by the tariff situation that gave for a freeze of investments at many of our clients. We were able to strengthen our position in some high potential areas and resilient sector. I was just speaking of the very good performance in AI. It was also quite resilient on topics such as cybersecurity, cloud, and SAP. But on the other hand, other parts of our activities were performing below our standard and weighed on the firm's overall performance, which is illustrated by the KPIs that Laurent was commenting earlier. Insufficient utilization rate, and even if our daily rates are standing up well, in fact, the daily rate over salary ratio is gradually decreasing, linked to the increase in average seniority. So a performance that is uneven across the firm, and a situation that on the overall was under pressure. If I zoom from a geographic standpoint, overall, our performance in Europe was not very strong. Activity declined slightly in Germany, while profitability improved a bit in this geography. Activity declined more significantly in the UK with low profitability. France posted moderate growth, but with some erosion in profitability. The positive point in France coming from Wavestone, a small consulting firm acquired at the beginning of the fiscal year, which delivered strong growth and improved margins during the fiscal year. And finally, our teams in North America maintained strong momentum throughout the year, both in terms of growth and profitability. If I'm now looking at what is coming next, and specifically what is coming in 26-27. Market conditions in Europe are gradually improving compared with 2025, but this improvement remains very slow, very gradual, because our clients remain globally cautious. The economic environment is not very attractive, and uncertainty continues to take its toll on the global situation, with some heightened caution for some of our clients linked to the situation in the Middle East. In this context, our priority in 26-27 will be to gradually restore growth momentum and improve profitability. And to achieve this, obviously, we will not be able to wait to be pulled by the market. We will rely first and foremost on ourselves by strengthening our execution and accelerating the transformations we need to implement. And I must admit that we are behind schedule in improving our performance. This is something we have to work on more decisively. We'll come back to that in a minute when speaking of our strategic plan. But as of 26-27, we will begin to work on that in order to be able to provide this growth momentum and improve profitability. However, given where we stand today, I would say that this delay in improving our performance leads us to indicate that we are no longer in a position to confirm our target of coming back to 50% recurring operating margin at the horizon of March 2028. The delay I have just referred to and the overall situation that is improving very gradually is reflected in the cautious target we are setting for the 26-27 fiscal year. We are targeting organic growth slightly higher than in 25-26, with an objective of delivering low single-digit organic growth throughout the year. And in terms of profitability, we are targeting a recurring operating margin of around 30%. So let's turn now to a more midterm horizon. And Karsten, I let you the floor to enter into leadership, our new strategic plan.
Yeah, in a few words, I'm going to explain you leadership, our new strategic plan through the year 2030. To start it off, I'll go back in history, because in 2021, we launched our previous strategic plan, Impact, which went through 2025, which marked a major step change in Wavestone's scale. In 4 years, the firm's revenue increased from 420 million to 950 million, significantly above the initial 750 million target. The share of international activity also increased sharply, rising from 15% to 50% of the firm's revenue. At the same time, Wavestone remained at the forefront of CSR performance. Lastly, the firm strengthened its leadership on key capabilities, including SAP, cloud, cybersecurity, and digital transformation. Now, to build leadership, we have engaged since February in an in-depth and collective review. For us, it was the objective to really deeply root our strategic planning into our stakeholders' needs. And so we performed more than 1,000 client conversations, met with vendors, institutional investors and analysts, and talked to more than 30 shareholders. In addition, from the internal perspective, we had more than 2,000 team members that contributed in 50 workshop gatherings and more than 900 consultants, sales, corporate functions, leadership team, and board members who gave their input to this strategic plan. One very important element to consider is that currently we have two major structural shifts that are dramatically changing our clients' priorities. First, we have a geopolitical shift. After decades of globalization, we are moving into a more fragmented landscape. And for our clients, it means a shift from global, lean, just in time, more into a direction, resilience, autonomy, and agility. And at the same time, we have AI, a new industrial and societal revolution at an unprecedented speed that's coming. And that means for our clients to redesign operations, rethink products and services, anticipate disruptions, and prepare to AI native competitors, which are completely going to mix up the market. Taking all this into consideration, we built a three-pillar strategy for 2030. The first pillar has the objective to reignite the momentum, and Pascal has spoken a little bit about it. We need to reignite the growth momentum within our firm, and as part of that pillar, we have a whole package of measures that we are going to do. Specifically, for example, putting more focus on sales, moving faster into buoyant and hot topics, doing some internal reorganizations where we strengthen our transversal business units, which give us more flexibility to move from one industry to the other. Doing so, we want to return to 5% organic growth and the first profitability standard by the end of the plan. And in addition, we want to resume our external growth. The second pillar is supposed to bring us into a new step of international expansion. Within that focus, we want to concentrate our investments in three key regions: France, Germany, Switzerland, Austria, TSA, and the US, UK, which we are going to integrate a little closer together because there are quite a lot of similarities between these markets. And if we bind them closer together, we are anticipating big synergies. So we are going to concentrate investments in these three key regions, which also means that we are not going to strategically invest in other regions inside or outside of Europe. In doing so, we will create three profitable and powerful engines to build the firm's future development. And last but not least, we want to position Wavestone at the forefront of AI transformation, and we want to make AI the new growth driver of Wavestone. And Pascal has talked quite a lot about AI, and I'm sure you're going to have additional questions, so I'm not going to go much deeper into that topic, but I will concentrate on something that we have to do internally to be really at the edge and at the forefront of AI. All right, thank you. Because AI offers a lot of opportunities in the market, but it's also a transformation imperative for Wavestone itself. And to answer to that challenge, we will deliver an ambitious AI upskilling program across the firm. We call it AI, and it's our objective to train all employees on AI. We've got 3 training levels for beginners, intermediate, and then the real expert level. And we build a full training and transformation program that will help all our teams to get the right level of AI capabilities. And at the same time, we want to become a pioneer firm in our own operations. We have corporate functions like any other company, and within these corporate functions, we already started to use AI, but we want to become a pioneer firm and use it to the largest extent possible, and to also have all the time and efficiency advantages that our companies are on. And most importantly, we will fully embrace AI in our consulting engagements. We need to enhance our value for money by using AI tools, becoming faster and more efficient in what we are doing. And that also means that we will proactively disrupt offerings that are no longer relevant because they will be completely done by the technology. Taking this into account, it will have a revenue impact at the 2030 horizon. Our assumption is that about 15% of our offerings will be disrupted, which means that we are going to stop doing certain things. And here, for example, we think about pen testing, like attacking our clients with human teams. This will be done by machines later on. Or for example, in the SAP project, there is a lot of data migration. Has already been automated a lot, but now in the future, the data migration will be done completely automated. So we'll have offerings, and I just gave 2 examples, that will gradually disappear over the course of the next 4 years. At the same time, we'll be more efficient in doing our work, and what we count as a volume deflation, because we'll be faster in doing our work because we are also using AI. So these 2 negative impacts will account for approximately 25% of our business. But we are convinced that they will be largely offset by new business opportunities that come through the AI transformation of our clients. And we can already feel it because we have significantly increased the amount of business in the AI area. And if we look at the requests for proposals that are coming in, we can see that we have a huge boost in AI demand, which is by and large going to be overcompensate for the losses that we have in AI. Now, taking all this into account, leads the shift to translate our ambition into clear and measurable financial targets. By 2030, Wavestone aims to reach 1.4 billion revenue, including around 350 million in GSA, compared with 350 million in GSA compared with 300 million today, and around 350 million across the US and UK combined, compared with 120 million today. We are targeting a recurring operating margin in the range of 14 to 16%, while maintaining our position among the top 5% of companies in non-financial performance. This trajectory has been designed with some headroom, allowing basically to adapt uncertainty and volatility on the trajectory, while continuing to invest on the long-term growth. More importantly, Lead the Shift is backed by substantial investment capacity. Up to 100 million of euros have been dedicated for OPEX expenses to AI, and around 800 million can be made available for external growth. This will be financed primarily to the firm's cash flow and the appropriated, complemented by bank finance. So, in summary, with Lead the Shift, we are opening a new chapter in Wavestone's development, combining AI leadership, international scale, and sustainable growth to build an even stronger Wavestone.
Thank you very much for attending this conference call. It was a pleasure to host you and to walk you through leadership. That will be a very exciting roadmap for Wavestone in the years to come. We will publish on July 29th our first quarter 26-27 revenue, which will be followed the next day by our annual general meeting. But we'll take the opportunity, of course, of this annual general meeting to comment into more details the activity during the first quarter and globally the evolutions of the outlook for 26-27. Thank you very much once again. Have a great end of day and see you soon. Goodbye.
Take care. Bye-bye.
Goodbye.